must say I'm very proud to be asked to present here today and to be the first speaker as well. Fantastic. I hope you enjoy this presentation. I think my presentation probably is going to be a little bit more of an introduction into climate change and highlight some of the key areas of concern. As mentioned, I'm Head of Enterprise Risk at RSA, but I'm actually representing the CRO Forum here today, who published the paper, The Heat is On climate change. The CRO Forum, for those who don't know, is a collection of CROs from across the big European insurers. I'm actually a member of the Emerging Risk Initiative, which is a subgroup of the CRO Forum, which, as we say, is there to consider the emerging risks that are coming up, the hot topics, those things which maybe we can see on the horizon, but we don't really maybe understand the impact of those risks and not really able to quantify them, but still need to start considering and preparing for them. So the CRO Forum published the paper, as I mentioned, The Heat is On. We chose that as a topic in 2018. At the start of 2018, when we chose that topic, there was a lot of concern about whether it was the right topic to cover, whether there's been enough, already too many publications on this topic, and whether it was really the kind of hot topic that we should be discussing it as part of that initiative. I think as you go through 2018, the information that was released, the number of publications that were produced, the work of the IPCC, I'll touch on in a moment, all highlighted the importance of this topic. It struck me that on the presentation today, this afternoon, when we're going to hear about cyber, it's presented as a potentially catastrophic risk that's already here. Climate change isn't one of those risks that people would necessarily is already here. We can see that there's potential impact in the future, but actually, it's the actions today that we take that are going to minimise the effect of climate change in the future. And if there's one thing I want to get across in the presentation today, the time for action is now, and if we don't take that action, we will probably incur catastrophic events in the future. So whilst it may not already be a catastrophic risk, it is one that we need to start taking the action on today. Okay. So in terms of the first slides, I really wanted to put together a key number of charts that kind of present the challenges ahead. Now, some of the charts that we present today are from The Heat is On. There are additional charts that we used either for our understanding or discussion during the process, which I've included, but actually in the publication itself. I want to start with the bottom left-hand corner. I don't know if we've got a clicker, but I want to start with this chart. So 450 parts per million limit. So this is the notional limit that the IPCC, and the IPCC is the International Protocol for Climate Change. It's a collection of international experts and scientists that look at the data and provide a consistent and recognised view on climate change. So the chart in the bottom is they've created a notional limit for CO2 emissions, which, if we were to surpass that, we are definitely going to reach the 2-degree limit. And again, I don't know how knowledgeable people are in the room, but I just want to touch on the difference between CO2 and methane. Climate change is caused by the greenhouse gases. I think the scientists have proven that. CO2 is the most talked about of those gases. Methane is another one that's commonly talked about. One of the aspects of CO2 is that it stays in the atmosphere for 100 years. So what we're emitting today is going to affect us for the next 100 years. The climate change and the heat and the warming of the planet that we've seen already is what we've been emitting for the last 100 years. Methane, on the other hand, stays in the atmosphere about 30 years, but it has a much greater effect. So although over a 100-year cycle, CO2 has a bigger impact than methane, in the shorter term, methane actually has a much greater effect, something like 9-10 times greater, if I can remember the science. So we're going to focus on CO2 here today, but we shouldn't forget about methane and the implications that has on a number of industries, certainly the agricultural industry, and us as the public and how we consume today. So in terms of CO2, if we reach that 450 parts per million limit, then we're likely to see warming. As we can see from the curve, we are, if we carry on the current trajectory, we're going to hit that limit by about, by about 2030 or just after 2030. This is the line of where we should be travelling, and you can see we're projecting or targeting off that chart. So that's one thing to emphasise. The chart above that tells you where we've been, with CO2 emissions dramatically increasing. So despite the fact that we've actually been improving our machines and making them more efficient so they emit less, we're still actually managed to double CO2 emissions since the 1990s. So how confident can we be that we're actually going to be able to reduce CO2 to a manageable level to restrict the warming that we could incur? I think that's the big challenge. And then the chart at the bottom here tries to present those in a meaningful way. So I don't know if people are aware, but RCPs are a different range of scenarios that the IPCC publishes to help provide some context. There are a number of different pathways within each of those scenarios, but RCP 2.6 generally takes us to the Paris targets of 1.5 to 2 degrees. RCP 4.5/6 is around about the current trajectory, which would take us to around 3 to 4 degrees. And RCP 8.5 will take us on beyond and up to 5 degrees. There's a chart on the next page that will help bring that to life. But the key message to take from this slide is the Great Depression is the one time when we managed to reduce our CO2 emissions in the last 100 years or so, and we reduced it dramatically. But if we were to follow RCP 2.6 to get us down to the Paris targets, we're looking at a year-on-year decline that's greater than that. So there is a really significant challenge here, and this can't be underestimated. In terms of these two charts, so that just helps portray what I've just been running through. So 2.6, as I say, is the 1 to 2 degrees, 4.5, 6, and 3 to 4, and 8.5 in the 5 or greater. So the previous slides are really highlighting the challenge ahead, and I don't think there's enough discussed publicly around the size of that challenge. That's why I wanted to emphasise that. This one then talks about the implications, and I don't think people are necessarily clear on the implications. The chart that we've produced here is one that pulls together insights from a range of different sources, some of which are probably scientifically sound, some of which are a bit more conjecture, but I think it gets across the point quite well. If we were to see warming on RCP 8.5 and above the 5 degrees, we are talking about a significant impact on civilization. But in the 2 to 3 range, we are looking at maybe some impact on food production, and you could see potentially, depending on where things move and where we go, you could see civil unrest associated with effects like that. Obviously, from in terms of perils, I'll come on to those in a moment, but as you move up these scales, obviously the perils also increase substantially. So there are two concepts discussed when we talk about climate change risk. One is the physical risk, which will be the focus probably of today's presentations, where we're talking about the actual physical implications, increasing windstorms, increasing droughts, volatility within the weather system, and then the transition risk, which is no less important for our sector, but is more around the risk of transitioning to a low carbon economy and what that actually means. So transition effects are likely to be more economic, but no less important for us as insurers, either in terms of the investments that we hold or in terms of the market and the size of the market that we support. But there are also opportunities within transition risk. New products or changing the products we have will create opportunities for us as insurers. So transition risk is much more near term. If we were to follow RCP 2.6 and take those dramatic changes in CO2 emissions, that could mean things like stranding of assets. So coal production, for instance, is one of the ones that's commonly mentioned through the climate change debate. If we take the extremes in transition, that could mean that those assets very quickly lose value or even be mothballed. And that's what we mean when we talk about stranding of assets. So those are the kind of risks that come through transition. Another point that's talked about in climate change is physical tipping points. These are important as well, and our paper covers these. I've not got a slide on here today, but in terms of the physical tipping points, we talk about things like permafrost. So permafrost, if it starts to melt, releases methane. I've just mentioned that methane has a greater effect on warming than CO2, so that could be dramatic, and what we're talking about there is an escalating effect. So not just are we warming our planet through our own activities, by changing our environment, it's escalating the impact. Other physical tipping points is the melting of ice sheets, and the stability of ice sheets depends on their size. If those shrink to a certain level, they could start melting without the need of climate change. And so we see it as an accelerating effect in terms of sea level rise. So a number of aspects to tipping points, but the slide below talks about the social economic tipping point. So this is, if to really transition, we do need to take some extreme steps, and at the moment we don't really see the political or social will for that, but there are things that could tip that over. So as publicity around this topic increases, as the public became more aware, there will be a greater drive to transition, and that's what we see as a socio-economic tipping points, of which the priorities are around, obviously, reducing carbon emissions, as we mentioned, so moving to electric vehicles, getting a carbon price that ensures that there's enough drive to push organisations towards reducing CO2 emissions. Also, taking steps like reuse of construction materials, thinking about how we're consuming and what we consume. One of the big challenges for climate change, and the reason we've seen the escalating increase in CO2 emissions, is that as a globe we are continue to consume more, and some of the major growing economies are significantly contributing to that. I think there's something in China, there's something like a new airport built every week or something ridiculous. So we need to be aware of our increasing consumption and the global, the size of the human population as well. So those are factors which have been driving increases. So we do need to think about how we consume ourselves and the impact that we're having on climate. The other points that are raised is CCS and forestation. So not only can we reduce the emissions, we can also extract carbon from the atmosphere. CCS is one of those common points that's talked about, so carbon capture. But it's important to note that carbon capture could mask the effects of us trying to reduce CO2, and we can't move away from not reducing emissions. CCS shouldn't be seen as a way of getting us out of this predicament. But also CCS, although there's many proven CCS projects out there at the moment, none of those are at the scale which really makes a material impact. So again, we also need to be aware of the fact that there is the opportunity for CCS, but there are also limitations at the moment, and it's going to we need to see some technological improvements before we could rely on that as a technology. So moving on to what that means for us as insurers, more people will talk about this later today, but increasing heat waves, droughts and wildfires. I think the Californian wildfires that were seen last year were impacted by having a very dry season followed by a very hot summer, creating the tinder effect within vegetation. River flooding, we're already seeing the effects of flood damage in a number of our countries, but that could escalate and amplify. And one of the things we talk about is sea level rise, which, even at a 2 degrees level, we could see rises of approaching 1 metre, so quite substantial. Tropical storms. One of the interesting ones is windstorm and cyclones. So the expectation is that actually there will be fewer cyclones, but when we do have those, they'll be of a greater magnitude, and therefore creating more impact. In terms of implications for insurers, I've split this really into changing risk for insurers and the economic factors. I think it's probably best to think about the changing risks as the physical risk side and the economic factors as the transition risk side. So, as I mentioned, perils deteriorating, changing extremes. We've seen more cat events coming through. I think there have been a number of cats over the last few years which are attributed to climate change, but we could see this becoming much greater and more frequent. Correlations as well. Climate change is affecting the northern hemisphere the Arctic more than it is affecting the Southern Hemisphere and the Antarctic. So actually seeing correlations in wind effects and weather effects in the Northern Hemisphere could create new correlations that we haven't seen previously. Diversification, again, talking about more of the extremes, maybe not in the next 10 to 20 years, but in the much greater timescales, you could see diversification opportunities on a regional scale reducing if zones of the planet around the equator become less habitable and industry has moved further north. In terms of economic factors, I've mentioned stranding of assets, so ensuring that we're investing in the right things and not incurring losses on the investment side is key. And opportunities for new products, so moving to supporting carbon lower emitting industries will be key and could create new opportunities for all of us. Also, demand reduction. So if, again, in the extremes, if there is implications for agriculture, for property, and for commercial industry, that will obviously affect demand. And as things progress, we could expect to see more political interventions. The regulators are already talking about the climate change and the role insurers have and the whole of the financial sector in the climate change debate. So you would expect that to increase as time moves on. Key to all of this, though, is insurability and affordability. We don't have an industry if it's not affordable. So, being able to track and understand the perils ahead, including focusing on our exposure data and modelling and underwriting risks effectively is going to become a greater and greater demand on ourselves, and we're going to hear more from that from speakers data. Using risk pools. So in the UK we have Flood Re. There's a number of risk pools that have been created around the world. Pools are probably going to be key to this too in terms of being able to spread the exposure. However, you also need to recognise that there are limitations to pools, and badly designed pools can actually have a negative effect. There was a US pool created in the 1960s which actually encouraged, or didn't mean to encourage, but as a consequence of that pool, encouraged the building of properties in flood areas. So designing the pool properly is also key to this, not just having pools. Hazard models we're going to talk about, and also using our knowledge and advising on standards and building codes to help move us forward in terms of prevention and adaptation. So, whether that means moving properties up in flood areas, whether it means changing the standards to ensure we can withstand storms, and also influencing government policy in those areas. So I talk about this as options for the insurance sector. What I really mean by that is what can we do as a sector? We're a really influential sector. We have a lot to offer on this topic. But, both in terms of acting as good corporate citizens, so reducing our own carbon footprints, being active investors and using our investment clout to encourage other organisations to take this topic seriously, but also using ESG frameworks to help us drive our investments in the right place, but also using ESG frameworks to help us consider the right areas to support through our underwriting as well. So both aspects are key to that. We've seen some high-profile organisations make some quite bold statements around coal, for instance. I think that's good. It's important. I think we do need to be careful, though. An employee of a coal mine still deserves to have a good employment protection. So I think acting wisely and using a true ESG concept will be key there. Improving disclosure, making it clear how we support or don't support climate change is also important. There's the work of the TCFD, the Task Force for Climate-Related Financial Disclosures, that's trying to move the debate forward in that regard. But the most important one as corporate citizens is probably planning ahead, supporting our capital strength and also supporting the strength of the real economy is going to be key for ourselves. On an insurance activity basis, maintaining that insurability and managing portfolios. The key to this, I think, is the research and modelling. Using our clout and our power and our knowledge and our insights and our data to really support the research of this topic and ensure that hazard models are being developed and expanding and are able to give us real predictions in the future. I think, there's still quite a long way to go in that regard, and I'll be interested to see how we're likely to do that in later presentations. I mentioned underwriting, portfolio management, and modelling capabilities, but also supporting prevention and adaptation is important, and using our data insights to drive the social change. So, since insurance was first invented 300, 400 years ago, we've always been using our understanding of the risks to help drive the debate forward in how to reduce those risks, partly for our own protection, but also moving society forward. And this, again, is another topic where we can do that. We gather a huge amount of data. If we can use that for the understanding socially and within governments, then we can really help drive that debate forward. And we shouldn't underestimate our power as a sector in doing that. So I hope that gives everybody a good overview of the topic and where I see ourselves in as an industry. And probably nothing new there, but hopefully some food for thought. Thank you.